Hello, welcome back to Business Consultant. Today we have brought you another financial model. This one is Thrift Store Excel financial model. It is based on forecasted about up to 60 months on the basis of revenue cost forecast streams as well as its cash flows, its operating budget, its cost of goods sold. As you can see over here, the beat cell will indicate that these are the input cells, whereas the gray cells will be the formula cells, and the light gray font will be the helping cells. Coming towards the input sheet will tell you about the funding assumptions, revenue and cost assumptions, customer and marketing budget assumptions, as well as the capex and opex of the business, and working capital assumptions. Coming towards the revenue analysis will tell you about the customers in the next 5 years on the basis of monthly as well as yearly. Then comes the um, then comes the revenue generated by revenue streams as well as the cost of service or cost of goods sold. As you can see over here, we will say it's cost of goods sold. Then comes the marketing budget. The marketing budget, as you can see over here, will be giving you the marketing cost for the business in different marketing streams, such as Google Ads, Facebook marketing, yeah, Instagram marketing, YouTube marketing. Then comes the startup summary. The startup summary tells you about the total funding, the total expenses of the business, as well as the assets, total liabilities, and capital of the business, and compares them for the first year, and then gives the total additional funding that would be required in the first year. Then comes the financial statements. The financial statements include the income statement, which tells you about the net income of the company in the next 5 years on monthly and yearly basis. Then comes the cash flow statement, which tells you about the cash inflows and outflows of the business through its operating activities, investing activities, and financing activities. This is also based on monthly and yearly basis. Then comes the balance sheet. The balance sheet tells you about the total assets and compares them with your uh, total liabilities and equity of the business. Then comes the financial analysis. The financial analysis tells you about the break-even sales, the company's valuation, which gives you the WACC of the business, and the expected equity percentage that can be offered to the investors. Then it gives you the sensitivity analysis, which is based on three different scenarios: actual, optimistic, and pessimistic, which gives you the NPV, IRR, and the payback period of the business in these three different scenarios. Then comes the KPIs and ratios. The KPIs and ratios will give you the profitability ratio, liquidity ratios, solvency ratios, and efficiency ratios, which are used in making financial decisions. Then comes the CAC-CLV analysis. This gives you the customer acquisition cost and the customer lifetime value and compares the both. Then comes the working capital. Working sheet. The working sheet includes all the information, all the calculations which are being used in the financial statements, such as employee payroll, operating expenses, depreciation schedule, loan schedule, and working capital. Lastly comes the dashboard. The dashboard tells you all about all the information in graphical context, which are used by the business to understand its to make its financial decisions much easily and fastly as fast as possible. That's it. This is the end of the video. Thank you for watching. Do like and subscribe us.